focus on something that really solves a problem or creates a conversation. If your product does not create its own conversation, you're going to make that difference up by spending to create that conversation, and it's not a sustainable way to build a business.
Welcome back, Modern Commerce subscribers. We're back at it here again with a special guest this week. And just as fun, we're actually launching a pilot episode to a new series we're going to hope gets picked up by a major network soon. So that'll be starting in just a few minutes here. But first, as always, got to kick it on over to my man, John. John, how's it going, dude?
I am doing well, Casey. Happy to be here. Also happy we have Mr. Nik Sharma here of Sharma Brands. E-commerce direct-to-consumer growth strategist, e-commerce investor, has lots of brands in his portfolio, has a lot of growth experience. Yeah, Nik, maybe just give us a little background on where you came from, what you're up to now, where your sort of knowledge base comes from, and the angle you're looking at in terms of retail, commerce, e-commerce, DTC.
Yeah. So first of all, excited to be here, and obviously, love working with both of you guys on in the day job. So my background is, I kind of started my career in organic social media, working with different celebrities on, Facebook and Twitter, trying to help them turn these channels from essentially broadcast channels, one to many, to become two-way streets, and, figuring out how to do that in a way that drives engagement, which drives followers and ticket sales and album sales and whatnot. After that, I graduated high school and went to an ad tech company. And nice. At the ad tech company, I, learned everything around data, programmatic, advertising, inventory, bidding, auctions, all those buzzwords and what they all mean and how it all works together. And more specifically, ended up working with a lot of publishers on, helping them acquire new visitors to their site. This was also back in, back before clickbait was essentially banned from Facebook. And so a lot of my clients used to be those publishers you find at the bottom of Taboola articles. You won't know what this celebrity looks like 27 years later. And, those were the guys spending anywhere from $80,000 to $150,000 a day driving traffic at pennies. And if they could get 2 pennies or 3 pennies out of the ad revenue by arbitraging programmatic display ads on their site, that $120,000 investment in traffic could equate to $250,000, by the end of the day. And so I really learned kind of like user psychology, what makes somebody click, what gets somebody to go forward, and how do you get somebody from your first slideshow page to get to the 5th, and all the mechanics behind that. I then went to a beverage company called Hintwater, where I spent 2 years building their direct-to-consumer business and really got, engulfed in the world of direct-to-consumer, building out a team, advertising on a bunch of different channels, not just Facebook and Instagram, but TVs and podcasts and satellite radio and out of home and all these things. From there, I came to New York, joined an agency for a little bit, realized that I really wanted to get my hands dirty and kind of go back to that operator side. And so I started consulting, and, about a year of consulting in, I thought, wow, this is pretty cool. I can, come in and suggest ideas, and then they actually listen, and then they work, and everybody's happy. And so I thought, let me productize this consulting that I'm doing. And so now I've hired a team, and we're probably, 15 to 16 people now, majority here in the US, a few international. And we basically help brands, from their earliest stages, pre-launch, helping them launch. We help brands that are between that 30 to 150 million a year in revenue range, help them kind of get over roadblocks that they're finding in growth, whether it's, how do they double their ad spend from 30 to 60 grand a day, or how do they, solve for discovering new audiences. We help a lot of retail brand or retail focused brands get online and kind of get them up to speed. in a way where they don't feel like they're missing out a lot, or they're not spending a lot of time, in the process of learning how to get online set up. We can come in and help them get that set up. And then the last segment of clients are, the big conglomerate brands that you see all up and down the aisles at Walmart and Target, helping them and usually their innovation teams kind of, get up to speed on what does e-commerce look like today, and help them understand, why certain things happen the way they do in the e-commerce world. Outside of that, there's investing that I do. So on behalf of Masala Capital, which is a rolling fund that I started recently, we invest into companies, consumer brands that are focused on helping people feel better, do better, live better, look better, et cetera. Basically helping brands that help people, feel better. And then the technology companies that help support those brands. So whether it's a subscription platform, an SMS platform, a technology tool that kind of helps you find the bugs in your stack, or an attribution tool, all the things that basically help these brands, do what they're supposed to do in a much more efficient way. So that's kind of the quick intro.
Nice. Yeah. So lots of background here. So yeah, Casey, we've got something kind of fun today. Casey, you want to introduce our new show, our new series that we're going to do, hopefully with a few guests, but I think Sharma will be a great person to start with here, since he actually does invest in brands.
Yeah. So guys, getting a sneak peek at this new series of our e-commerce business investing show called The Lobster Pot. Totally based off of itself and nothing else. We came up with it all by ourselves with our big creative brains. John and Nick are going to serve as our lobsters. They are going to meet with founders of e-commerce businesses, and they are going to decide which business is the most investable and invest their own money into these e-commerce brands. Maybe not. I don't know.
I got $25 right here.
Yeah. Ooh, baby.
Take it or leave it.
These are high stakes. They're real high stakes. So without further ado, guys, I'm going to go ahead and go get our first e-commerce business owner. They're going to sit in this hot seat and explain their brand.
Sounds
Awesome.
good. This is good. Excited.
Hey, lobsters. My name is Scott, and I own a brand called Wicked Ball Markers. And Wicked Ball Markers has done 1.7 million in sales year to date, and projected to do about 2.5 million by the end of the year. So you can make a wicked good decision by investing in a Wicked Ball Markers. So with that, I'll go ahead and take questions from you now, lobsters.
What do you say? What does Wicked Ball Markers sell?
Yeah, Wicked Ball Markers. We made a name for ourselves selling ball markers. We make all kinds of different designs. We make pizzas, donuts. We got your Captain America shields. Really, we can take anything and turn it into a ball marker for you.
What is a ball marker?
Wait, you take
ball marker.
pizzas,
So
you turn pizzas into ball markers?
exactly, yeah. Not actual pizzas, mind you, but I got my putter here. You can see I'm a big golfer. I go out and I shoot the back nine at least once a day, maybe the front nine too, depending on how I'm feeling. But I like to start with the back nine, a little different. But yeah, if you've never played golf, you need something like a ball marker. It'd be really cool if I had one of my own here right now, but I don't happen to. Our inventory is all tied up in customs right now. Anyway, so if you've never played golf before, you need a ball marker to put down to mark where your ball is. And, most of the time people just use some quarter, something like that. But that's not nearly as cool as using a pizza or your donuts, things like that.
I got you. Okay.
Makes sense.
So it's kind of like a little kind of circular piece that people put, like, I know what you're talking about now. It's like when you get on the green, you need to move your ball so that other people can get on the green and putt, but you need to remember where it was, right?
Yeah, that's exactly right. You're wicked smart.
How much do you sell these for?
Well, our average order value is about $44. So they vary in price depending on the designs, but usually it's somewhere, I'd say around $30 is kind of the typical price for one of our ball markers.
Oh, okay. People purchase those for $30, and on average, they're purchasing 1.5 of them.
Yeah, it could be. There's a range in the price of the product, like I say, but yeah, it's somewhere in there. Maybe a hair under that price.
Is this something that like golfers need a lot of? They purchase them really regularly, or is it like, I'm gonna buy a ball marker, like that's the last time I'm ever gonna really need a ball marker. I'm not gonna buy another one.
You might think that, but I found that once people kind of get the fever for buying the ball markers, they see it as such a characteristic of the game, amongst the friends that they're playing with. They like to show off. They like to have something cool. If you're a big beer drinker, we don't only do circular objects either. We can do a beer mug, do all kinds of different things.
Oh, okay.
Got it.
So this is something that people buy kind of over and over. Your customers aren't one-time customers; they're multiple-time customers.
Absolutely, and we're dabbling now in like the club head covers. So we've got some other products down the line. We also sell hats. I almost forgot. We've made a big name for ourselves selling hats. We take golf brands sometimes, and we do kind of parody versions of those golf brand names. You might have seen some of them around. I'm not allowed to discuss one of our most famous examples, but yeah, we also sell hats. We got some apparel as well.
How many markers are people buying every year? And is there a seasonality to it?
There is a seasonality. Yeah. Obviously, when the weather's nice, you can go out and play on the course. People tend to buy a lot more. Whenever there's a big golf tournament on one of the major tournaments, we have a lot of our big sales at that time. Yeah. So did that answer your question?
Yeah. How many markers do people buy a year on average?
Oh yeah, on average. Well, our returning customer rate it's about 15%. About 15%. And I would say, I don't have that number right here in front of me, but yeah, I would say we get people who buy. They come back a couple of times a year, maybe to make a purchase.
Okay, so typically, you might be looking at $90 to $105 a year sort of customer value. How long have you been in business? Do you have people who are buying every year? Like they bought last year, they bought again this year. You know what I mean?
Yeah, we've been in business for a few years now, and yeah, I have noticed there are people who are pretty avid buyers of our brand and the products. So yeah, we've had some solid people who are true to the brand.
And how do these people find the ball markers?
Yeah, well, you can imagine with the kind of products we have, people tend to think they're pretty humorous. So we get a lot of kind of publicity around that. We've had a couple press pieces that really blew us up. With one of our again, legally, I'm not allowed to discuss it. I settled outside of court with one of the big golf brands, so I can't bring that up. But you might have seen it. It starts with a T. I can say. There's a big. It starts with a T.
And what are you raising exactly?
How much are you looking for?
What are the terms for your raise? How much are you raising, and what valuation?
Well, I'd be interested in hearing what you think about that, I guess. I didn't come in with any hard numbers. I heard I was just trying to win a contest.
Well, okay.
What are you raising for?
Yeah.
Right.
What do you need the cash for?
So we need to keep making new products. You see, so in this nature of this game, we can't keep selling the same thing. The same kind of products don't tend to stay funny. We need to make new products all the time. And we found a new model where we kind of make a big deal of dropping a new product, and it tends to explode for a little while, and then we got to find new products to drop all the time. So
and really, on the $30 marker, how much does it cost you to make it? And then how much does it cost when it's delivered to the customer, including shipping and packaging and all the fees with pick and pack?
Yeah. What do you think? What do you think about that? I wonder what you think our margins are.
I mean, I don't know. I guess.
I would assume.
Are you manufacturing them? Are you
70% to 80%?
sourcing them from somewhere? Is it print on demand? Do you warehouse them? I don't know. Yeah.
Yeah. I was really interested in hearing your guess. That would have been kind of cool. But yeah, no, we do have a manufacturer that makes them for us. We do print on demand for some of the hats and whatnot. But yeah, mostly the markers we do manufacture them ourselves. Yeah, John, I'm curious, what do you think a margin might be on that?
If you're manufacturing them yourselves, like that means you're vertically integrated, so that's good. I would guess you have much higher margins, like 70, 75%.
Oh, wicked smart. Nailed it.
That is what it is. Okay, on your markers. But on your hats are print on demand. Are all your hats print on demand?
Let's just say, yeah, they are. Yeah.
So the margins on those are probably 30%, something like that.
Yeah, not as good. Not as good.
What's your are you profitable? Are you losing money? Are you burning more cash than you're making right now?
Now we're profitable. I do a lot of the legwork myself, so there's not a lot of overhead exactly. So yeah, we are pretty profitable. Yeah, got my.
How long have you been running this?
It's a few years now. I want to say about 3 to 4 years now.
And what do you want to do with it?
You know,
You
I
want to
don't
just build it?
Yeah, you know, I guess I've been caught up a little bit in the day-to-day so much that I don't have specific goals in mind. But, you know, I could really use a strategic partner that could help me out with that.
Mm-hmm.
Okay. Would you be looking for anything other from us other than just capital? You know, do you just need the capital so that you can like inject? It sounds like what you need is like more designers to design more products, just be able to source and manufacture more product more quickly, just so you can be dropping more often. But, you know, would you be looking for any kind of strategic help from us other than just the capital that we'd be infusing?
Yeah, absolutely. Like I said, you know, we've changed tactics quite a bit because we find that things don't always tend to keep working if they were working. So we are looking forward to anybody who can bring more strategies into the war room and help us raise that revenue.
Okay. Do you have any other questions, Nick?
No other questions. Have you looked into debt financing for these purchase orders? It sounds like you need the money for purchase orders.
Yeah, I haven't ran that one down. I can't say that I have.
So you'd rather have investors, equity holders that put capital in for equity than to take on debt.
Yeah, you know,
it sounds like you operate at a profit at a low overhead, and you know, you want to stay that way, sort of.
Yeah, I'd like to have somebody in the same boat as me and help me raise it because they got stake in the game too.
I got you.
So I guess my question for you, Lobsters, is who's ready to risk it and get the lobster bis? Get it.
All right. Well, we have to hear from a couple other founders, but we will get back to you.
All right, guys. I'll let you go ahead and discuss. I'll leave the room now.
All right.
Thanks a lot, Lobsters.
So what pros and cons on that one, do you think?
I mean, pros is he's got a cash machine. You know,
Yeah.
you put you know, he's got customers that come back 2 to 3 times a year, depending on where they are. If there's a golf tournament, you know, that's close to them or that they're really interested in, I'm sure their LTV is much higher in a certain year than others. They've got 70 to 75% margins. He's already done 2 million, which means, you know, if he's doing that, then he's made about $1.5 million in cash.
Mm-hmm.
He's got a great AOV, you know, 1.5. And it sounds like he acquires most of his customers really from earned media or referrals.
Right.
My initial thought is that he shouldn't be raising for equity at all. He should probably go raise some debt from, you know, something like a Wayflyer or a Settle, where he can really just plug in his production order. They give him the cash, he manufactures. I mean, it sounds like he sells out pretty quickly.
Yeah.
And you know, he can do that for anywhere from like 1% to 4%. I don't know that he even needs like a strategic lobster on board.
Yeah.
You know, the other thing is I don't even know if I'll ever get my money out. It sounds like this guy wants to just build it, and it sounds like a great lifestyle business. It doesn't look like a venture scalable business or, you know.
I think if I were putting something into this, then it would be on a regular draw basis or on a royalty basis. You know,
yeah, I was thinking royalty or some form of cash, you know, out of his margins.
Quarterly draw or a royalty. I don't think that he's going to exit here. And I do think the vibe the sense that I got from him was that, yeah, he needs them for purchase orders. So I do get the cash play because I think that at only a 15% returning customer rate, that was a little surprising. But I think that the reason he wants the money is because his returning customer rate is higher if he can drop more product, but he's just not able to right now. So I do see how the cash would help him, but I'm with you. Like, there's other ways to get cash if I were going to invest. I mean, as an investor, I'm kind of like, all right, well, maybe it is worth it on a royalty basis, but it's going to be a long turnaround as an investor.
Yeah. The other thing that was interesting was his peak season where he's probably spending, but also making money is when he's got to be producing his product, because his off season is also kind of the off season for manufacturers.
Yeah, exactly. Yeah, I do like summer brands from a seasonality perspective because you get the summer hit and then you get the holiday hit as well.
Yeah.
Yeah. Okay, I think that's good. I think we got something to think about on that one. Let's bring in our next founder into the lobster tank.
Hey, brothers. I own a patriotic apparel brand called Official USA Apparel. We've done $4 million year to date, and we're projected to do about $5.5 million. So my question for you is, who is the most American crustacean? I'll take your questions now.
Okay.
What do you sell?
Go ahead, Nick.
Yeah, that's good. I probably could have led that. We sell Patriotic T-shirts mostly. We do some sweatshirts, some other things as well, but mostly it's Patriotic T-shirts. With our main design is just a big USA right across the middle, right across the chest. Loud and proud.
How are people discovering you?
Oh, people are discovering us in all kinds of ways, but I do have a pretty significant social media following.
Okay, so it's mainly grown on your platform, on your social media platform.
Yes,
on your personal brand.
Correct.
Okay.
Do you do any kind of advertising right now?
Yeah, we do some paid ads, but again, the bulk of our it seems like the bulk of our traffic comes from some organic social media efforts by myself. Yeah, I'm a real hustler, so I do a lot of that stuff on my own.
Okay. Are you sourcing apparel? Are you doing print on demand? How are you getting the designs on the product, and how are you, what's the shipping sort of mechanism?
Yeah, we are sourcing, and we do limited amounts of all our different products, and we do drops regularly, and people just can't wait to get their hands on all of our products as soon as they drop.
Okay, so you have kind of big spikes in sales around your drops.
Oh, absolutely. We do more we do a regular drop on Fridays. We do 10 times more on Friday than all the other days of the week combined.
I see. Okay, so you're able to drop new product pretty much every Friday.
We miss some Fridays, but yeah, usually at least 2, maybe 3 Fridays a month.
Okay.
And what's the how many units are people buying every time they buy, and what's the average order value of that?
Our average order value is about excuse me. Our average order value is about $55. People tend to buy 1 or 2 things at once, and we get a lot of returning customers. They, like I said, people are really fanatical about our brand. They're really they're really big Patriots, and they want to make sure, they got a closet full of our products at home.
Okay. What are you needing a cash injection for?
To be honest with you, I think I'm in need of more of a strategic partner myself. I've grown this thing as big as I can get it. And like I said, there's some logistics. We don't have a product drop every single week. I think there's a big opportunity to really to hustle that out and get that fixed. But I run this thing largely with a small team. So we're operating at maximum capacity right now, and I've never ran something quite this big before. So I'm looking for a strategic partner in that way.
On the 4 million you've done to date, what's your margin on the products, and also are you profitable as a business?
Oof. To be honest with you, I don't know all my margins. I want to, I'm not that guy exactly. I'd love to give you an answer, but I don't know that today.
Okay. And do you know if you're profitable?
Honestly, I just keep hustling this thing out. I think we're making some good money, but I couldn't give you the exact amount.
Do you pull any money out for yourself?
I do a little bit, but I'm really hoping to get this thing to like $1 million a month, to where then I can have a really nice payday for myself. I feel like that's the kind of finish line I'm looking for.
Okay, so you're trying to get to $12 million a year. So is your personal kind of living expenses and general being expenses, is that being funded by your personal income is being funded by this business, or do you have like another job? Or
Yeah, this is my only job. Yeah, it is funding my lifestyle.
Okay. Clear. So there's got to be at least some level of profit there, unless.
Correct. That's true.
You're bootstrapped. You're not funded in any way. So all the cash to operate the business also comes from the business, correct?
Correct. That's correct.
Okay, but you don't have a P&L, like a statement that you could share with us if we had to get that.
More of a creative guy. Honestly, I'm not the numbers guy. Yeah, I've always been more creative. I'm really big on the messaging. A lot of people think we cut the country in half. We only have half of the country is a target customer, but that's not true. Patriotism never goes out of style. It's not partisan. No matter who you are, you can be a patriot and wear one of our USA t-shirts.
How many followers do you have?
Millions. Last time I checked, there was a few million. I tend not to overthink about those kinds of things, honestly, but I have a big multi-million.
Okay, 3 million.
Hey, let's say almost 10. I'm about 8 point something.
Okay, I'm mostly on Instagram or multiple.
Yeah, I'm a big Instagrammer.
Okay.
Mm-hmm.
Okay, clear. Are you leveraging that following on Instagram to like have an email list or an SMS list, following somewhere else?
You do, and this is where I could really use more help with more of a strategic partner. I'm not a super big email marketer. My following is really big, but I'm having a little bit of a hard time turning that into a list on email. Our email list is really only about I want to say somewhere around like the 50,000.
Mm-hmm.
So pretty small from what
have you hired an operations person or a COO before?
No, I pretty much hustle this thing out myself, but I'm open to that.
Okay.
I don't have any other questions. Do you?
Yeah, me neither.
Okay, great.
All right, guys. Thanks for your time.
Thank
All
you.
right.
Go America.
Go America.
Go America. What do you think about this?
Yeah, no shot.
No, you wouldn't
Zero.
put any money into this
Nope.
because there's.
I'd maybe advise. I'd probably advise because I like the guy.
Yeah, I might trade advising for equity.
Yeah, that's what I would
How
do.
do you even trade equity when there's no P&L? Like, how do I evaluate it?
Yeah, I mean it's a lifestyle business.
Yeah.
He doesn't know his numbers. It's which is a huge red flag.
Mhm.
He doesn't know if he's profitable or not. Another big red flag. I think like the founders that don't know their numbers, like the really good founders, you could be like, hey, how much revenue did you do last Tuesday? And they would tell you exactly how much.
Yeah. And like, if we're comparing, right, because we're going to invest in one of these brands. If I'm
Right.
comparing him to the first brand, the golf brand, I get that you're a founder, that you're a big picture guy, you're a high level guy. You started this as a passion project and stuff, but he at least had his head around some numbers. He probably, he had some answers, and it seemed like if we had more questions, he would I can run that information down for you.
Yeah. Yeah.
Right? Whereas this guy kind of seemed like, I'm not that guy,
Yeah.
I
think he just needs a COO. Actually, that's all I think he needs.
I might advise for maybe even free if it was but maybe for an equity share, or maybe I wouldn't even know how to evaluate an equity share.
Yeah, I don't know.
We don't even have that information, so it's a tough one. I can't. How do you do anything?
Yeah.
Cool. All right, let's bring our next founder into the Lobster Pot.
Hi, lobsters. Hi, lobsters.
Hey.
Guys, it's been me the whole time.
Breaking the fourth wall.
Yeah. Sorry. All right, guys, I'm here today to tell you about my brand, Taste of China. We sell sauces, authentic sauces from China. I have a partner who is from China originally. She knows all about the authentic cuisine there. She has been super involved in creating all the recipes. She's really handles that a little bit more than I do. But they can go on anything. Once you get a taste for these flavors, you can't live without them, and you'll put them on everything. Put them on pizza. You put them on spaghetti. You'll put them on ice cream even. even cakes, even crab cakes, because you can have your crab cake and eat them too if you invest with me, because I don't have any more lobster puns, so we're going with crabs now.
All right, food and bev, right up your alley, Nick.
Yep. On the so hold on, where does the product get made? You mentioned your partners from China. Is your partner in China producing the product, or did they just formulate it here in the US and it's made here?
Yeah, it's actually it's made here. It's made here.
Okay, and are all of the ingredients? Are you guys? So you're not sourcing. You're sourcing ingredients and you're making it.
They're authentic ingredients.
Okay,
Right.
Are the ingredients sourced here?
Well, they're ingredients from China.
Oh, okay. So you're pulling ingredients from. Okay.
Yeah.
All right.
And what are this sauce? How much does it cost? And on that cost, what are your costs to produce it?
Good question. Yeah, we have a few different products. We have one that's more savory. It's got like a hot kind of flavor to it. And we've got one that's like a little sweeter. And we've also got we've got one that's more versatile. And we've also got some other new products as well. We've got like I don't know if you know about hot pot, but it's pretty trendy these days. And we've got a new hot pot base that we're selling. Our margins, hold on here, guys. I've got some numbers here. So we've got an average order value of about $43. Did I mention? Sorry, guys. Did I mention we're at about 3 million year to date? We're projected to do maybe about 4 million. And I'm sorry, what was your question? Oh, margins. That's
Margins.
yeah. Oh, it's eluding me right now. Oh, boy. See why they call this the lobster pot. It really gets hot in here, especially when I was just wearing a really heavy coat a second ago. Oh boy, yeah. I can't find that right now. I can't find that margin right now, but
You have a general ballpark of what your margins are.
yeah.
Yeah. Okay.
Yeah, we've got a good margin of about let's say 65%.
Okay. Cool. So that's landed and everything.
Yeah.
Okay. When people start, when people try it, they can't get enough of it. How do you know that? Yeah, I mean, what does your return customer rate look like? What do you know what your lifetime values look like at 30 days, 60 days, 90 days by chance?
Yeah. So our returning customer rate is almost 20%. So yeah, people like it. They really like it. Really,
Do you have a subscription program?
We do not have a subscription program as of now, but we do have a subscription program. We do.
Do you know how much of your revenue comes through the subscription program?
Oh boy, yeah. Hold on here. Hold on, one thing at a time.
Even if you just have a ballpark, that's okay.
This is good stuff. Good television, right, guys?
Just sitting here quietly.
You'd think I'd be more prepared coming onto a show like this. Okay, hold on. I've got some numbers here. So first order. I think there's been a couple questions. So our lifetime values. We get first order about around 40. After about a year, about 60 is our customer value.
Okay.
$60.
Yeah, and then right in the middle there, about 6 months, about 54.
Okay.
Yeah, does that answer?
So most of your customers don't come back.
Oh.
Yeah, I mean, sounds like
it's almost like they fly away.
Flying away.
Okay, so what are you looking for? Sorry, I know there was maybe some other questions or data you're running down, but I also want to throw out is what are you looking at a cash injection for?
Cash injection. Yeah, we want to really do a lot more in advertising. We want to blow this thing up. We want to put it into ad dollars. We want to to open up that revenue because we can continue to make our product pretty good. We got a nice setup.
Okay.
Have a nice setup.
And are you running any advertising right now?
Yes, we are.
What's your customer acquisition cost for that $40 purchase?
It's fluctuated a lot in this last year, especially. I'm sure you guys are aware of that. But our customer acquisition cost right now is just below $30. So we're at about 28. But yeah, we
you're almost profitable on that first purchase.
Yeah,
you're close to break even.
Okay.
Yeah, but earlier in the year we were much happier with it. We were more around like the $10 to $15 range.
Mm-hmm.
Have you scaled, or is it just because of data loss and struggles with advertising?
We've begun to scale, but yeah, I mean, a lot of it is that data loss that you're mentioning.
Are you doing anything to increase your repeat purchase rate? I mean, 20% is pretty low.
Yeah, well, I think honestly, if I'm thinking about it, maybe it lasts a long time, and maybe people don't need it as often as thinking. Maybe.
Interesting. So yeah, okay. And yeah, Sharma's the food and beverage guy, so I'm sure that's a problem with several consumables.
Yeah, I mean, basically with a $60 lifetime value, you're barely breaking even when you're acquiring customers with advertising. You'd probably make more money going door to door and not spend money on advertising.
Do you do any other type of are you getting traffic anyway besides paid advertising?
Well, paid is our main way, but we have some press. Let's see what else. We have organic. We got good organic traffic. Yeah, we're kind of big. There's not a lot of people competing with us in this space. We really feel like there's a huge opportunity. We really feel like we're the most authentic in this, and it's something that we believe we're on kind of a mission. Honestly, we believe that there is a need for this, and we're willing to try to prove it.
Do you have plans to get the product into retail?
We're not opposed to that.
Okay. So you'd be looking for a cash injection to scale ads, you kind of said. So
yeah, we think.
I don't know that I have any other. Sorry, go ahead.
I think we can crack that if we just keep going. Like I said earlier in the year, we were seeing really good results, and at the end of last year, and I know that it's been a tough time on running ads here in the last 6 months or so, but we really think we got a winner here that we can do really good with.
Are you profitable?
Yeah.
Yeah, you are right now.
Yeah.
Okay.
And
barely, or
yeah, barely, but yeah.
Okay.
The money that you want to raise, how much do you want to raise, and what's the valuation you put on your company?
Well, so like I said, we're projecting about 4 million in revenue right now. So putting an evaluation on that is pretty tough. We'd be
probably 10 or 12, something like that.
Yeah, that'd be the ballpark. Yeah, but as far as like a deal structure and what we're looking for, obviously, we know a little bit about your background, you guys, and we see value in the strategic partnership as well. So we'd be interested in any kind of deal structure, really, to land a strategic partner like yourself.
Okay. Further questions from you, Nick?
No other questions.
All right, guys. Well, thank you so much for your time.
Wait, I have one more question for you. Sorry. Ultimately, would you like to bring this brand to an exit, or are you looking to kind of build it? What do you want to do long term here?
We would like to build it. Like I said, we believe in this, and that's it's something. It's kind of our baby.
Okay. Great. No further.
All right. Thank you for your time. Well, thank you. Bye.
Thanks.
I for sure liked that character best.
That was definitely the best character. The accent switching was interesting. I wonder if he was just being racist in the beginning, trying to change his accent, or.
Well, you know what I noticed on, after we talked to the golf brand, your East Coast started coming out.
Mine?
Your East Coast accent started coming out. All right, so let's talk about that brand.
Yeah.
Look,
it's tough, man. I can't value that more
than.
than. Yeah, I can't value that brand more than 6 million.
Okay.
4 million at 65% margin. That's before any actual costs come in to run the company.
Mhm.
But, assuming it's a 65% margin, he's basically going to make 1.5 for fair numbers. And, assuming that's his like bottom line number, I would put a value of 6 million on that business.
Yeah.
I don't think a royalty structure makes sense because he's not really making any money in the first place. There's no money to get a royalty from.
We can't take the little bit of margin on a royalty.
Yeah. And I think he's got 4 products. His AOV is 40. His lifetime value a year in is 60, which means that only about half the people that come are ever ordering again. It sounds like he's got to do a lot of work on understanding actually who his consumer is. He's clearly getting the wrong people. It sounds like secondly, his product might be too big. So either people are ordering it and it just lasts too long, or they order it and it takes so long to finish that they just never remember to reorder, which happens a lot in food and beverage. And the third thing he's got to focus on is, he's got 4 products. My guess is most of his money, or most of his revenue comes from one.
Yeah.
And if he's launching new products, he's got to figure out how to sell those to his existing customers.
Yeah, for sure. And I guess one of the questions I didn't ask was, do we plan to drop more new product? Because that could for sure help retention revenue and things like that. But the biggest thing that sticks out to me is when I look at anything consumable or anything, I'm actually going to go even broader here and say what I will categorize as a high frequency brand.
Yeah.
So consumables are high frequency. So, and when I say consumable, I mean, not necessarily only things that you consume, but like things that you use, you run out of, you need more of, right?
Mm-hmm.
So, something you put on your body, something you might consume. Other high frequency brands are typically like apparel brands, right? People
Sure.
buy often. The worry I have here is that we essentially have a 50% lift on initial order over 1 year.
Mm-hmm.
If it's consumable, then it's got to be high frequency to survive DTC. Essentially, your product just has to be so good that like people just want it and keep buying it, right? And like they can't look. Red Bull could literally spend whatever to acquire me.
Mm-hmm.
Like I will buy it, and they don't even have to put me on subscription. If it's not at this store, I'll go to that store. I'll buy it online. I'll do whatever needs to be done to get Red Bull into my house. Like that's what you need. That's the ideal from a consumable, and it doesn't sound like they have that. So that's what makes me hesitant. I don't know if you have any tricks around that, or if maybe they're just not doing good enough retention work, or whatever. But yeah, that's what makes me hesitant. I mean, I think I would invest in this brand if we could do a deal structure that is, and it sounds like they want to build it, right?
Yeah.
If they wanted to exit, I'd be a little more attracted to it.
Yeah, I think his first order number is right around where his AOV is. It sounds like he just needs to focus on AOV. He needs to focus on better, more targeted advertising. Mm-hmm. He needs to focus on retail because food and bev is really hard going direct to consumer. It's a great platform to launch the business and really learn about your customer and get to that point where you're doing 3 to 5 million in revenue. But if you really want to make an impact to the bottom line, which he needs to do in order to continue this business, he's got to look at points of distribution, which allow, no direct, basically he needs retail. He needs more distribution, he needs sources where there's traffic already, mm-hmm. and he's not spending for every single person to see it.
Right.
I think his biggest focus,
and then even if the LTV isn't as good, it's okay. And it actually tends to feed the LTV, right? Because they're going back to the store for other stuff anyway.
Right. I think his biggest thing to focus on is the repeat purchase rate. That number needs to go up.
Yep. Here's where I'm at on if we're deciding one of these brands to invest in. First of all, I'm not crazy bullish on any of them.
Yeah.
I would probably go with brand one on a royalty and just look at it as just a long-term thing that's going to, you know, give me mailbox money every month. And so it
Mhm.
doesn't seem like you need strategic help, unless as my investment partner, you think that you have a big win available for brand 3 in getting them into retail.
I don't think so. I would say I would probably also go with brand 1 and structure a royalty deal where, you know, we can become almost a source of funding capital, you know, for his POs.
Yeah.
As well as provide strategic advice, insights, recommendations, guidance, etc. For basically a royalty, but not for hard equity.
Yes, for
I don't
sure.
think that company was going to exit.
All right, so let's nail down what would be the best deal structure we would give brand 1. I think one of two come to mind for me, and I'll let you kind of nail down what you think the details of the best deal structure you'd offer was.
Mm-hmm.
I'm either going to give him cash one time right now to help fund some POs and maybe some product designers and stuff like that, and I'm going to just trade cash for a percentage royalty, and we can decide. You know, you can throw out the numbers you think you do there, or I'm going to say, hey, I'll be your bank for a percentage royalty and also a payback on my, like, I'm not just going to be your bank and give you $50,000 every quarter for the royalty to stay the same. You know what I mean? So it's going to be a royalty and you're going to pay me back on certain terms on that cash that I give you. Thoughts here?
I like that. I would add, the way I was thinking was basically act as his bank. So no cash today, but when we sign the deal and we sit down and go through his PO, we fund his PO. We get some return on that PO. And then every year, you know, for essentially strategic advice, guidance, you know, kind of helping him through the process, we take anywhere from 6 to 10% of revenue. And that essentially becomes our fee, our consulting fee. And the goal is that, you know, it might be just 100,000 or a couple 100,000 this year, but in 5 years, that might be $500,000 or $1 million. And that's on us to help build that with him. And he's got the margins to support that. And then I think we also figure out how to get him into retail.
Yeah, I agree. Because if he has unique products, then why not? Sporting stores, stuff like that. The other, so you're thinking we fund the POs, we have certain terms around like recouping our dollars to fund those POs. What do you think around funding product design for him? You know,
no, I think he's got the margins to fund that.
Okay.
Yeah.
So we'll fund POs. We're going to set up terms around funding those POs for him whenever he needs to put a PO in. And then we're going to take a, 6 to 10% cut per year. And maybe he doesn't even need that much strategy. So maybe it's like, hey, yeah, you pay us back clean on the POs and the interest we make is the 6%. Whoa, the 6% of revenue.
Yeah, that sounds good to me.
All right, let's do it.
All right, guys, I'm back. Sorry,
where'd you go? You missed this whole thing, dude.
I was actually out in the waiting room, just kind of entertaining the guys who were waiting to come in, and I was talking with them after they'd come back out, and they were saying you guys were really grilling them, and they really need to know their numbers a little bit better. That's what it sounds like to me. But I will say this, they all were really attractive men. I thought they were extremely good looking, so they got that going for them.
They do all have that going for them.
But lobsters, do we have a consensus of who the winner is here without giving it away?
Yes, brand 1.
We do.
And totally giving it away. That was
without
right away.
I didn't know how you wanted to end this thing.
Did you want all three to come in at the same time?
Yeah, let's get them all three in here.
Oh man, no, they left. They just said they wanted me to send them an email. Yeah, those guys are gone. They aren't coming back.
Okay, go ahead, Casey. Did you have more?
Well, I just had a line I was gonna say. We're gonna who you guys
hit us with the show tagline.
Yeah, exactly. I was gonna say who we gonna save from the lobster pot and who we gonna leave in the boiling water. And
oh, gotcha.
So John, go ahead and tell us.
Brand 1, but not a cash infusion like he's looking like. I think what keeps us from doing that is like, it's hard to infuse cash if you're not going to get an exit, right? And Sharma, you can chime in here too, but and furthermore, it kind of seems like a lifestyle brand. We weren't fully confident in the numbers, stuff like that. So we will, bankroll POs for him and get a return on that. Like they'll, he can pay us back for those. And then, essentially our interest will be 6% to 10% of his revenue per year.
Awesome. That sounds pretty cool. Sounds awesome, guys. Well, this has been a super fun episode of Modern Commerce for me. Hopefully the same for you guys. Nik, we do a little tradition around here. I'm going to buy you some time, but we usually let the guests have what we call a parting shot. So kind of you can summarize the episode or really just give us some bigger droplets of wisdom around the subject matter. So buying you a little bit of time here so you can think about it. But guys, before we do that, if you like the episode, please drop us a like, hit that subscribe button, hit that bell so you get notifications on whenever we drop new videos. If you liked some of the guests we had today, let us know. If you didn't like them, keep that to yourself. No, I'm just kidding. You can let us know that too. We're super honored to have you here with us, Nik. So without further ado, why don't you go ahead and give us a little parting shot on today's subject matter?
Yeah, I mean, I think, based on today's subject matter, I would say, when pitching for an investment, you definitely want to know your numbers inside and out, your revenues, your top line revenue, your bottom line on that revenue. You want to know your margins, whether or not you're profitable. How close are you to profitability? What will it take to become profitable? You want to understand the seasonality of the business, which our first brand did really well. And I think if you're a lifestyle business, it's really hard to be venture scale or even really receive investment. If you are running a business that is entirely focused on paid advertising as its main channel or main driver of building the business, you're essentially competing with the internet and you're competing with everybody else out there. And I would say lastly, be more like the first brand, like find, don't try to just look at whatever's out there that's an easy way to print on demand or source some products and turn it into a direct to consumer brand. Focus on something that really solves a problem or creates a conversation. If your product does not create its own conversation, you're going to make that difference up by spending to create that conversation, and it's not a sustainable way to build a business.
For sure.
Excellent. Definitely words of wisdom there. I got to ask before we go, have you heard pitches worse than that?
I've heard a couple.
I'll take that. I mean, those guys will take that.
Yeah.
All right. Super fun. Hey, if you work at ABC, NBC, CBS, one of those big, we're fielding offers for this new show. Thanks again, Nik Sharma, for joining us on behalf of myself and John, the regular Modern Commerce team. See you next time, guys.